Bank of Canada has left rates unchanged at 1%. Now, low inflation remains a concern, but the tone was slightly less dovish. Like many analysts, Sal Guatieri, a senior economist at BMO in Toronto, was actually expecting the decision. The Canadian dollar reached the highest level in 2 weeks after the announcement. So, Sal, by the end of the summer, where do you see the loonie heading?
Well, we see the Canadian dollar weakening another 2 or 3 cents down to about 87 cents US by the summer, only because it's likely that the market will continue to price in a very small chance of a Bank of Canada rate cut until we see a sustained upward trend in inflation over the next year. And at the same time, the Federal Reserve is slowing its pace of asset purchases. So we likely will see longer-term interest rates rise a little faster in the U.S. than in Canada, which will weigh on the Canadian dollar. But by late this year and next year, when the Bank of Canada is expected to raise rates ahead of the Federal Reserve, we would expect the Canadian dollar to move back above 90 cents US.
The Bank of Canada reiterated it expects to see GDP expanding 2.5% in 2014, although the first quarter will likely be softer. So, Sal, what are your growth expectations?
Yeah, 2.3%, so up from 2% last year. Somewhat faster than the economy's potential growth rate, and that should be enough to keep the unemployment rate on a gradual downward trend.
Canadian real estate has all the symptoms of a bubble, including overvaluation, overbuilding, and excessive household debt. Now, would you agree with this, and do you see it cooling, and are there any possibilities of the bubble actually bursting?
Yeah, that's been our sense for a while now. We saw the housing market rebound more than expected last year. Following the tightening of mortgage rules in the previous year, the housing market just came back much stronger than we anticipated. But towards the end of the year, we were seeing a softening trend in sales and for the most part, prices outside of the Toronto area. And that's very much our view for this year. As longer-term interest rates rise gradually, we should see the housing market stabilizing for the most part. It may continue to weaken in parts of the country. Certainly Quebec's housing market seems quite weak at the moment. Same story for the Atlantic provinces. Meantime, Alberta and Saskatchewan could see continued strength in their housing markets.
Sal, thank you very much. Well, viewers, do stay tuned as we have plenty more interviews and economic updates heading your way.